Hi, welcome back. Matt here. Here's how the 11 sectors ended the week. Energy was the highest performer, up about 4% for the week. Consumer discretionary, the biggest loser for the week, down 3%. There was a lot of hope going into the week that there would be a Santa Claus rally, taking stocks and indexes to some intra-week highs, but it just did not pan out that way. And that's actually been the case over the last 20 years or so. The average return during the week leading up to Christmas, 0.385%. Some people believe that the Santa Claus rally extends through January 2nd. So if that's you, there's still some time for it to take place. All views are my own. It's for entertainment only, not financial advice, and all investing involves risks. Please make sure you have a good financial plan before doing any trading. Here's how the S&P 500 looks on the 2-hour chart. On the 19th, that was the start of the week. We pretty much closed about even from where we started. There was just a lot of chop in between. In terms of taking trades, I alluded to the channel commodity index being one of the indicators that I use. Here are some other ones that I have, and what I look for is a lot of my indicators lining up before I take a position. If the RSI gets oversold, in addition to the channel commodity index being oversold, that's a better indication to me that it's short-term oversold and maybe a good entry point. I usually look for a MACD that's very separated and starting to kind of turn up. If the MACD is above and starting to curl over, that's when I usually exit a position. I also like the slow stochastics. If they're considered oversold, that to me is a good indicator that it might be a good time to get in. And the Chaikin money flow, if it's in the negative, that's a contrarian signal to me that I should maybe look to buy. So just putting this into practice, if you look at times when things are oversold, such as on the channel commodity index, relative strength index, it's pretty much down here in the red. The MACD was starting to swing up. Slow stochastics are oversold, and the Chaikin money flow is negative. That would be, a signal to accumulate or to buy. And I don't just buy once. I usually just try and space out in terms of position sizing, a few purchases over the course of a few days. And then for an exit signal, a really big run up, I like to exit position. If you get a big bounce and a big gap, I'd like to take profits. So also using the Bollinger Bands, like this one bounced off the Bollinger Band here. If it comes up into that other one, that might be a place where I'd exit. So these are just some of the tools that I use that you can add to your own trading style. The Qs are looking pretty similar to the S&P 500. The week started on the 19th over here and ended slightly down overall for the week, about 2%, I think, according to that sector chart that I put up to start the week. If you're looking for a contrarian play, there's a positive divergence on the channel commodity index and the RSI, and the MACD's crossing over and pointing up. Slow stochastics are pointing up, and Chaikin money flow is going from negative to positive. IWM actually a little positive on the week, opened around 173 and closed at 174. So pretty much flat, still in a chop box here. And the positive divergences that we saw in the Qs, we're seeing the same on the IWM. Here's the VXUS Vanguard International. Got a gap up here at 52.5, but also big gap down here, 48 to 50. I'd probably let that resolve before thinking about taking a big position in this one. So a few gaps below and one small one above. Not to say that it can't fill that one ahead, but in terms of risk to reward, looking like there's more downside on this one versus more upside. Here's the Vanguard Real Estate. had a pretty strong rally over a couple days to end the week pretty much flat from where it started. It's the common theme here. Still have some positive divergences. Slow stochastics turning up, MACD turning up, but if I wasn't already in a position, I don't think I'd probably take one here. Maybe wait for this gap fill and look for shorting opportunities. That'd be my play. And so what do the bonds say? Bonds actually moved a little bit here this week, and yields increased and bond prices went down. So we had a little bit, I talked in my market recap last week that was bonds looked like they were starting to roll over, and that did happen. So now what you have is oversold short term on channel commodity index, oversold relative strength index. MACD looks like it's trying to start curling back up. Checking money flow is negative, so this might be an area where I look to take a trade. I like trading the triple leveraged version of these, which would be TMF for the bull side and TMV for the bear side. High yield junk bonds didn't move nearly as much as the long-term treasuries, the 20 plus years. They tend to behave more like stocks, so they just kind of chopped around similar to the other stock asset classes that we saw. Big gap down here, the 71, 72. So might wait for that to resolve before looking to take any positions on this one. The AGG core aggregate bond also started to roll over a little bit, and still a really notable gap down here, 94s. The indicators are starting to improve a little bit, but in an overall, looks like it's a reversal of trend. If you just zoom out on the weekly chart, looks like, testing resistance, and a lot of these are looking like they're gonna head back down. So overall bearish context, and if you're going to take short-term trades, make sure they're only lasting a few days or so. Oil was one of the asset classes that was up for the week. It's getting into overbought territory here. Channel commodity index has not reached overbought yet, relative strength, but close. MACD pretty separated and high, but looks like it could start to roll over. Same thing on slow stochastics. Checking money flow is positive. If you took a position in oil last week, this might be a good place to take profits if you haven't already. Then here's gold. Gold pretty much flat for the week, gapped up, gapped down. It's kind of hung out in the same area as where it started the week. A lot of chop here the last few weeks in gold. Some gaps down below. I think I'd probably hold off if I wasn't already in a position here, because it's just kind of middle of the road on all the indicators. If you zoom out to a weekly time frame, getting to the top of the Bollinger Band, have two wicks pointing down. It was overbought. The MACD is pretty separated, and the slow stochastics look like they're rolling over. So probably just tread carefully on this one. Look for a better entry. As far as what's on the calendar for the economic week, some Case-Shiller home price changes, a lot of housing data on Tuesday, and then mortgage applications, mortgage info Wednesday. Then Thursday, jobless claims will be one to watch. If you're trading oil, natural gas, there's some commodity info that comes out on Thursday that can move some of your positions. And then finally Friday, the Chicago Manufacturing Index. That's really all I got for you. Just hope you got some value out of what I shared with you today. Please like and subscribe. Send me any questions to tradeinyourjob@gmail.com. Thanks.